Good day, everyone. I am Mark Medalla of Group 3, and welcome to another cost accounting session in Accounting 135. In this video, I will be discussing a new cost accounting system, which is process costing. The objectives of this lesson are as follows. Explain the concept and purpose of equivalent units, assign cost to products using a 5-step process, assign cost to products using weighted average costing, prepare and analyze a production cost report, assign cost to products using first in, first out costing, analyze the accounting choice between FIFO and weighted average costing, know when to use process and job order costing, and compare and contrast operation costing with process and job order costing. Before I proceed, let me inform you that this lesson consists of two-part supplemental videos, and the one you're watching right now is the first supplemental video of process costing. In the last lesson, we delve into job order costing, wherein we are able to know and comprehend its cost flow, as well as the assignment of materials, labor, and overhead into certain job orders or batches. Now, let us move forward to process costing. What is the difference between job order costing and process costing? In cost accounting, businesses or companies will use job order costing when products or services are unique to one another. With that, products or services are treated as client or customer orders and they are dissected into batches. Nevertheless, there are businesses or companies where their products or services are identical, homogeneous, or the same to one another. And obviously, these products or services, if not all, but mostly, will undergo different and numerous processes in specific departments. If a company applies job order costing in that kind of production setup, there is the possibility of mismatch or erroneous assignment of materials, labor, and overhead into products or services due to the complexity or intricacy of that production setup. That's the time it is essential to use process costing. Process costing is an accounting methodology of accumulating cost of production by department or cost center, whereby costs are charged to processes or operations and averaged over units produced. To make it clearer in this sense, process costing is a system applied to allocate the total production cost to homogeneous or identical units, produced in mass or large numbers, just like chewing gums. Although they may differ in taste, color, appearance, or whatnot, they still have these pretty similar characteristics, except that they undergo multiple steps or departments during the production process. To understand the system of process costing, let us use T accounts. As you can see, there are multiple work in process inventory T accounts segmented into different departments. This is due to the fact that there is a separate work in process inventory account assigned to a product for every step or process that it undergoes during the production process. For instance, the products mass produced are tables. Let us assume, based on the given work in process inventory T accounts, that in Department Process 1, that is for the assembly department. In Department Process 2, that is for the product painting department. And in Department Process 3, that is for the packaging department. As for the finished goods inventory T account, that is where the manufacturing company classifies the components of the completed form of the products. In a typical manufacturing system, the three elements, materials, labor, and overhead, are essential and thus included in the production process that will result in certain products or finished goods. As we recall in our past accounting lessons, materials, labor, and overhead are debited to a work in process inventory account once the production of a certain product commences. When the process in Department 1 is done, The accumulated cost of the completed units in Department 1 will be transferred in Department 2. If there are additional costs, they will be classified into what type of product or inventoriable costs they are and are to be added in the product cost. When the process in Department 2 is done, the accumulated cost of the completed units in Department 2 will be transferred in Department 3. As you can notice, it is just similar to the treatment in Department 1 and Department 2. If there are additional costs in Department Process 3, they will be classified into what type of product or inventoriable cost they are and are to be added in the product cost. This is another similar treatment in Department 2. When the process in Department 3 is done, the accumulated cost of the completed units in Department 3 will be forwarded in the finished goods inventory. Once the finished goods or the products are sold, the entry for that is a debit to cost of goods sold and a credit to finished goods inventory. Hence, in the posting, cost of goods sold is credited to finished goods inventory. So, what really is the objective of process costing? First, we determine the unit cost of the product or service, then determine the method of allocation of manufacturing cost incurred during a given period, wherein the said method will serve as the formula to allocate the accumulated materials, labor, and overhead costs to process cost centers. Since the products or services under process costing undergo different processes from specific departments, businesses or companies use different formats. In the system, we call those formats cost of production report or production cost report, which identifies the total production cost, which are the materials, labor, and overhead of producing a certain good. The key purpose of the cost of production report is basically to assist in the control of cost, which is accomplished by holding each department responsible for costs incurred in the department. Let us take a look at some of the relevant parts of the cost of production report. Thereafter, I will be illustrating them by solving some accounting problems under this approach. First, units to account for. This refers to the total units of the period. This is composed of the total beginning work in process units and the units started into production. Second, units accounted for. This refers to the total units that go at the end of the accounting period. This is composed of the total completed and transferred out units and ending work in process units. Third, equivalent units of production. This refers to a measure of the amount of work done during a period, expressed in terms of fully complete units of output. To get the EUP, multiply the number of partially completed units by the percentage of the process completed. Fourth, cost to account for. Basically, this is just the cost of units to account for, which consists of the cost of beginning work in process inventory, as well as the cost added during the period. Fifth, cost accounted for. This refers to the cost of units that go at the end of the period. In other words, the cost of units accounted for. Sixth, cost per EUP. This is just the unit cost, whereby the computation of which is akin to the computation of units accounted for. It is just that you need to determine the equivalent units for materials and conversion before the actual computation. Now, let us delve into the different steps that one must follow under the process costing system. The first step is to analyze the cost flow model by determining the inventory levels on number 1, beginning balance of work in process inventory for a specific department. It is inevitable in any business to have the end of the accounting period, especially if that business is functional for more than a year. The beginning balance of work in process inventory are simply the units that are not yet completed during the prior period. Hence, they are forwarded to the beginning work in process inventory to the next accounting period. Number two, units started during the period in the department. Of course, during that new or current accounting period, there are units that are already in the midst of the production process. So, the business or company will record them as it will be vital in the process costing system. Number three, number of the beginning work in process units and units started during the period were completed in the same period, or the units to account for. Number four, units not yet finished. It is possible that there are units started during the period that are not yet completed or still in production, even if the period ends. For those units, they will be transferred in the next accounting period as beginning work in process inventory. The second step is to determine the number of equivalent units produced in the process called the equivalent units of production, or EUP. Since the products under process costing system are homogeneous to one another, it is hard for cost accountants to determine the product or inventoriable cost per product. That's why, in this system, we assign equivalent units of production, or EUP. Let me give you an example to visualize the notion of EUP. For instance, if the ending work in process inventory in a specific department is 4,856 units, take note that this ending work in process inventory is not yet completed. All materials were added at the beginning of the production process, and conversion cost, or the materials and overhead cost, applied to the units is 55% complete as to conversion. The question is, what will be the EUP for materials and conversion? Let us solve the EUP for materials and labor. Since the materials are already added at the beginning of the process, the percentage of the process completed is 100%. We then multiply the 4,856 units by 100%, which will result in 4,856 units. That 4,856 units is the EUP for materials. On the other hand, since those 4,856 units are 55% finished as to conversion cost, that's why we multiply 4,856 units by 55% to get the EUP for conversion cost, which will result in 2,670.8. Take note that the product is not a whole number, and thus we need to round it up for the reason that units are always and must be represented in whole numbers and can never be represented with decimal numbers. Hence, the EUP for conversion cost is 2,671 units. The whole units manufactured by the company that are not yet completed is actually 4,856 units. In process costing, however, we see and acknowledge the actual percentage of the production of specific products, and that percentage will be multiplied by the actual number of units to obtain the EUP for materials and conversion. Take note that the EUP for process costing is different from that of the physical units. It does not imply, for instance, the products are chairs, that the units are 60% complete, and that there are no legs for the chairs. The concern in process costing is the percentage of the labor and overhead as to completion. With that, we derive that percentage to assign the EUP for conversion. Furthermore, for EUP calculation, we have two approaches. Number one, weighted average or wave method, and number two, first in, first out, or FIFO method. To get the EUP under the wave method, all we need to do is to get the amount of the completed and transferred out units, add the ending work in process, and multiply the work done in the period. On the other hand, to get the EUP under the FIFO method, all we need to do is to get the amount of the completed and transferred out units, add a product of the ending work in process multiplied by the work done in the period, and subtract the product of the beginning work in process multiplied by the work done in the period. The solution used in the example earlier is in fact a wave method approach. The third step is to calculate all of the applicable direct cost and indirect cost incurred in the production process, so that these costs will be assigned to the equivalent units as to completed units and in-process units. Relevant cost in this scenario comprises all costs associated with beginning inventories and, of course, current period cost added to continue the production process of a certain product until it will be completed. The fourth step is to calculate the cost per EUP. Akin to EUP, there are two approaches. Number one is under the wave method, and number two is under the FIFO method. To get the cost per EUP under the wave method, just add the beginning work in process cost and cost added during the period and divide it by the EUP. To get the cost per EUP under the FIFO method, simply divide the cost added during the period by the EUP. The fifth step is to allocate all relevant costs to all products completed and all products still in process when cost per EUP is available. In other words, we assign cost to all finished products as well as to the ending work in process inventory. There are two methods or approaches in process costing, which are, number one, the weighted average method or the wave method, and number two, the first in first out method or the FIFO method. In the weighted average method, the process is to get first the beginning inventories and all the units that are processed in the period, whereby the cost assigned to the units are summed up with the cost of the beginning inventories, as well as the cost of current production. To simply put, the ones you assigned under weighted average method are all incurred costs associated with production. In the first in, first out method, it is of utmost importance to take into account the order of production and the percentage completed for materials and conversion cost in a specific department. Moreover, under this approach, products that are produced first are assigned a cost first, and they are the first products to be sold, used, or disposed of. That ends the first part session of process costing. To continue, just pay 1 million cash right now. Nah, just kidding. Anyway, goodbye for now, and see you in the next session.